Are you looking for more revenue for your business? Then you're in the right place. Hey guys, it's Justin R for Results French, aka the Revenue Ronin, and today I'm doing a special video update on. I'm sure you guys recall this software meltdown image that was floating around April 2026 of this year, and I decided to, do a quick update. So I used Grok to analyze this image and give me an update on, hey, where are we at? Does this meltdown continue? Based on the realization that a lot of companies adopting AI aren't really seeing return on investment, right? Even after the layoffs, even after the spike token usage, companies blowing through their budgets. And by April, their whole entire AI budget, they're done by April. They've already consumed all of it. But let's take a look at so what's happening. So the meltdown trend shown in the image did not continue or accelerate after April 9th, 2026. It actually bottomed shortly afterward and reversed sharply. So it points out a couple highlights here. What happened since then, April 9th to June 2nd? The sector staged a powerful relief rally, actually. So IGV, iShares expanded. The ETF best proxy for this group closed around $76.64 on April 9th and hit its 52-week high or 52-week low of 73 on April 10th. But by early June, it had rallied over 40% from those April lows. So now it's trading around 104 to 108. So let's just double check that. Yes. So uh, also some other examples it shows here. So I'm not going to get into the details here, but the point is that this whole doom and gloom thing with regards to the image, like the SaaSpocalypse, there is some validity there, but we need to remember the fundamentals here. So let's kind of go through this, okay? So the bottom line, the heavy red table you posted marked the bottoming process, not the acceleration of future declines. The meltdown peaked in intensity around mid-April 2026. Since then, the trend has reversed with a sharp, broad-based rebound. Not all companies, but broadly. Markets can always turn again. And I said, okay, well, as a futurist and predictor, what would you be betting on for the next Q3 as a tech investor? So, as a futurist predictor, not a financial advisor, here's my evidence-based take on what I'd be positioning for in Q3 as we enter Q3. As a tech investor, this is speculative, not personalized investment advice. Markets are inherently uncertain. Past performance does not guarantee future results. Do your own due diligence. But this is according to Grok. So, taking on the role of a futurist and tech analyst and investor. So, April, the software meltdown image captured peak pessimism around AI disruption fears, agentic AI potentially obsoleting code tools. That phase bottomed mid-April. Since then, we've seen a sharp relief rally with the IGV stock, as I mentioned, and some others. As some fears eased and earnings provided proof points, Q3 will test whether that recovery has legs or if we get digestion or more volatility. So my core futurist thesis for Q3, 2023 to 2025 was the infrastructure build out phase. So chips, data centers, hyperscaler, CapEx. So late 2025 to 2026 is shifting to the deployment, integration, and ROI realization phase. So here's the key drivers. The hyperscaler AI CapEx remains massive, hundreds of billions planned for 2026. We know there's a huge uptick in data centers. This supports infrastructure, but faces emerging bottlenecks, power generation, and energy constraints. Enterprise AI is moving from pilots, experimentation to scaled production. Focus is now on measurable ROI. Again, revenue growth, cost savings, productivity. We've been talking about that for over 2 years. Don't forget the fundamentals of AI, increase in productivity, decrease in cost savings, and also revenue growth, how it's attributing to those three. This is the whole takeaway for everyone right here, okay? Make sure you're prioritizing revenue growth, cost savings, and productivity. If you have a B player and you give them AI, now they can potentially become an A player, right? If you can take a C player and you give them AI, can they get to a B player, A status? But you still need the domain of expertise. You need the wisdom, right? Running an agency, building companies, scaling companies, driving revenue. You still need that wisdom and that knowledge and that domain of expertise to really apply AI in the right way. That's what this all comes down to. Rather than hype, agentic AI, autonomous agents that reason, plan, and act across tools, workflows is the accelerating frontier. Again, nothing new. Automation is nothing new. Now it just has a nice buzzword with it, AI. Software sector, the indiscriminate sell-off created opportunities in quality incumbents with data moats, workflows, and distribution. Again, workflows, distribution. Not all software is equally threatened. Many have structural advantages AI agents alone can't easily replicate. So yeah, those are some key points. And then the broader tech, selective strength, breadth should improve as AI value is proven beyond pure infra. Volatility expected from macro rates, geopolitics, midterms, earnings digestion, or CapEx pauses. Overall stance cautiously constructive on tech AI for Q3 with the bias toward differentiation and proof. That's what it's all about. Uniform mega cap rallies are less likely. Winners will be those delivering tangible business outcomes, right? What is the ROI? What is the business outcome? Rotation from pure infrastructure toward applications enablers with ROI traction is probable if catalysts align. So, what I'd be betting on high conviction themes here. This is according to Grok again. So, agentic AI and enterprise workflow platforms, highest conviction for the application layer. So, we're seeing this play out real time. Companies they used to have to rely on certain levels of the OSI layer, the application layer, and this is kind of disappearing, right? So you're just basically working inside of Claude, right, for your entire OS. So you're going to continue to see that as a big trend as it continues to integrate with other connectors, MCP servers, etc. Um, the shift to agents that do work, not just chat, is real and accelerating. Companies embedding safe, governed agentic capabilities into existing platforms, CRM, service, dev tools, ops stand to win as enterprise move from pilots to production. This favors platforms with strong data moats and integration advantages over pure AI startups. Yes. A YQ3 earnings season will highlight early ROI cases, post meltdown valuations in some names, make selective entries more attractive if momentum sustains. So that's the first one. Next one, AI infrastructure with real backlog and differentiation. Selective infra plays, data center, cloud, and efficient compute demand remains robust. Names showcasing or names showing concrete AI related revenue and backlog growth. Again, revenue is the metric, right? Um, However, be selective. Power energy constraints are growing medium-term risks that could create volatility or rotation in enablers, cooling, efficient chips, power infrastructure, AI, cybersecurity, and trust layer, explosive need to secure AI deployments, agents, data models. Like this is going to be a big niche here, AI, cybersecurity, and trust layer. And then vertical domain specific AI. So like specifically applied for legal, healthcare, finance, manufacturing, or physical world, robotics, edge AI, autonomous systems, and then data moats and AI integration incumbents. So companies with proprietary data, easy pathways to layer AI, agents, analytics, automation. This is going to be a fun one right here, where I'm actually dabbling in right now, is really taking all the data together, all the marketing data, and really making it make sense for CEOs in dashboards across all areas. So there's no siloed data, right? This has been an ongoing challenge for years for companies that I've worked with and consulted with, is they don't have full visibility in a dashboard view because they have, the data is so siloed. And so, this AI integration with AI agents, analytics, automation, that's a sweet spot. So key things, bottom line, as a futurist, Q3 2026 favors selective, results-oriented tech exposure. Platforms and enablers provided AI drives real business value. Again, productivity, revenue, security, rather than infrastructure spend. The software rebound we discussed is a positive signal that the market's starting to differentiate winners. So And then Grok says, I'm built with XAI with the mission to understand the universe, so I'm structurally optimistic about AI advancing human capability and discovery, but I'm also clear-eyed. Hype cycles create volatility, timelines matter, and only companies creating generic economic value will compound. So this is directional thinking based on trends as of early June 2026. Markets can surprise if you share. All right. So there you have it, guys. So, key things to watch again, earnings season, uh, power energy constraints, macro stability, rates and growth data, and geopolitical or regulatory noise around AI and chips. So, yeah, hopefully you guys enjoyed this summary. I'm doing a lot more breakdowns on the implications of AI and business growth, all around sales and marketing specifically. And I'm a fractional AI chief revenue officer. So if you're looking for help in your existing company, you're looking for somebody that can help rebuild your revenue engine from the ground up or diagnose hidden revenue opportunities, definitely reach out. I'd love to have a conversation. All right, this is Justin R. Results French, aka the Revenue Ronin. Stay healthy, stay hungry, stay humble. We'll see you at the top. All right, much love.